Hello and welcome to today's daily analysis for the 12th February 2024. So starting off with the dollar index, the US dollar index today slightly rose last week but faces uncertainties as the market awaits US inflation data to gauge the potential for a rate cut. Federal Reserve Chairman Jerome Powell stance in early February influenced a brief dollar surge. From our technical analysis, its signals indicate potential challenges for the dollar's long-term strength, with mixed indicators on moving averages and sign of a stall in buying momentum. The suggestion is to consider shorting the US dollar index near 104.20 with the stop loss at 104.38 and target levels at 103.85 and 103.80. And then for our crude oil, US WTI crude oil climbed 5.71% to reach $76.47 per barrel last week, driven by heightened geopolitical tensions in the Middle East, including the Israel-Hamas conflict and disruptions in refined product production. The ongoing offensive in the Gaza Strip and the closure of US refineries contributed to a 3% increase in oil price late last Friday. Looking ahead, the oil prices are anticipated to remain range-bound but tilted to the downside. The 20-day moving average at $77.23 serves as an initial resistance level, with potential breakthroughs signaling further gains towards $79.28 and $79.40. Conversely, robust support is identified at $75.85, challenging levels at $74.07 and $74.17. Considering the current scenario, a suggestion is made to go long on crude oil near $76.20 with a stop loss at $75.90 and target levels at $77.30 and $77.50. Next, we have gold. For gold prices, it was stuck between 2015 and 2045 last week, facing resistance due to expectations of higher rate interest and improved global risk sentiment. The uncertainty over the Fed's stance on rate cuts caused the dollar to consolidate, influencing gold direction. The traders are waiting for US consumers' inflation data for clues about potential Fed actions in 2024. Technically, the gold uncertain status is reflected in the neutral oscillator on the daily chart. Resistance is around 2044.50, and breaking this level could lead to 2065. On the downside, support is at 2015.50, followed by 2000, and the 25-week moving average at 1982. The suggestion is to consider going long position on gold below 2020 with a stop loss at 2016 and target levels at 2035 and 2038. And then we have the Australian dollar US dollar. Last week, the AUD USD fluctuated around the psychological level of 0.65, rebounding to a weekly high of 0.6540. Despite obstacles like the S&P ASX 200 index decline and lower commodity prices, the Australian currency markets recovered intraday losses, offering potential support. The Australian dollar found some backing after RBA Governor Michelle Bullock highlighted the commitment to managing inflation, noting positive trends but emphasizing the need for further progress. On the weekly chart, AUD remains around 0.65, slightly above the psychological level. A potential upward break above 0.6540 and the 20-week moving average could drive further upside, targeting the 200-day moving average at 0.6571 and 0.6570, with additional levels at 0.66, 0.6641, and 0.6675. On the downside, 0.65 is a crucial support level, followed by last week's low of 0.6468 and the primary support of 64. Today's suggestion is to consider going long position in Australian dollar before 0.6505 with a stop loss at 0.6490 and target levels at 0.655 and 0.656. And next we have the British pound, which faced early week lows at 1.2518 but stabilized above 1.26 by the end of the week, influenced by varying factors. The US dollar gained strength from rising Treasury bond rates, impacting the pound, but a hawkish stance from the Bank of England officials and a mild improvement in risk sentiment provided some relief. The short term outlook suggests a potential for further losses, but a sustained break below the 200-day moving average at 1.25654 is needed for the downtrend to continue. The 14-day RSI remained below 50, indicating bearish potential, and the moving average support a downward bias. For today's trading, a long position on GBP is recommended before 1.2605 with a stop loss at 1.2590 and target levels at 1.2655 and 1.2665. The resistance levels at 1.2675, 1.2720, and the December 28 high of 1.2828 are key areas to watch for potential reversals or further upward movements. The buyers defending the 200-day moving average could lead to a test of 1.2675 resistance, while a break above it might pave the way for further gains. Next, we have Japanese yen. The yen hit a new year to date low of 149.57 against the dollar, driven by dovish remarks from the Bank of Japan Deputy Governor. The positive stock market sentiment reduced to yen safe haven appeal, influencing the USD Japan yen pair. Despite a subdued US dollar, focuses remains on upcoming US consumer inflation data, which could impact Fed policy decisions and US dollar sentiment. Looking at the weekly chart, last week breakout above the 5-day high and the 76.4% Fibonacci rebound level set the stage for bullish momentum in the USD Japan yen pair. The recommendation for today is to go long on USD at 148.95, stop loss at 148.60, and target levels at 149.90 and 150. The further strength may pave the way for a continuation of the recent uptrend, targeting 151.91 and 154.66. On the downside, potential corrective declines could find support at 147.45 and the 25-week moving average at 147.37, with further downside testing at 146.30 and 146.50. And last, we have the Euro USD, which struggled below 1.08 last week, facing resistance after a technical rebound from the December low. Despite the dollar's overall strength amid higher treasury yields, Wall Street stability limited losses for the euro. Cautious remarks from the European Central Bank officials expressing concerns about the spring rate cut, providing some support for the euro. However, downside risk persists technically, with immediate support at 1.0722 and potential slide towards 1.0643 and 1.0516. A recovery above 1.08 is needed for further gains, targeting 1.0861 and 1.09. Today's recommendation is to go long on the euro before 1.076, stop loss at 1.074, and target levels at 1.082 and 1.0835. And that is all for today. Thank you for watching. If you have any questions, feel free to reach out to us.